Hi, Jonathan York from Bay Financial Partners, looking at investment markets. The sort of post-Trump election rally appears to be hitting a little bit of a speed bump as he's sort of issuing executive orders sort of left, right and centre. Obviously the major implications at the moment has been this sort of blanket cover on the immigration and certain countries banning entry into the US, and that's obviously brought some pretty high profile sort of resistance. It's sort of quite interesting in the US, sort of 50% of the top sort of tech companies were either founded or are currently run by an immigrant. And that's sort of, pretty interesting. There's obviously some pretty high profile names on that list, and they're certainly voicing a little bit of concern about this latest sort of policy implications. Probably top of the list would be Sergey Brin, obviously the founder of Google. That's a pretty heavy hitter there to be coming out and talking against this policy. So obviously implications, the market's hitting a little bit of a speed bump out there, and it's really sort of quite interesting now to see the data that's going to be coming out at the end of this week on the employment side. Because currently at the moment, the US economy is pushing on a pretty reasonable rate. You've got some pretty good growth. You've got an unemployment rate that is below 5%. Most sort of economists would view that as pretty much full employment. If you see a further addition to jobs this Friday, they say that further points to evidence that interest rates will be looking to move up this year. 2 or 3 hikes, probably looking at 3 now if you continue to see this growth going forward. But obviously, against that, the big question mark is sort of Trump and his policies and how the implications of that on the US economy. Elsewhere, you're looking at European markets sort of pushing on a reasonable rate. A little bit of growth going forward out there. Also, as well, globally appears to be a little bit of a pickup in inflation, which sort of quite sort of strange, really, because central banks for the last sort of 3 or 4 years have been looking at sort of controlling inflation. And arguably they've done too good a job at doing it. And inflation has been pretty benign, really, across the global economies. But you're starting to see a little bit of a pickup in that on those inflation numbers. Obviously, implications for that is sort of potentially higher rates, which again is what a lot of these central banks are looking at doing, getting their interest rates back to a more sort of normal and neutral level that is sort of sustainable rather than these current very low interest rates. Obviously in Europe, on certain maturities, you've actually got negative rates, which clearly is unsustainable in the long term. Here in New Zealand, market's sort of holding a reasonable bid. Still some pretty good demand out there for the sort of dividend-paying stocks. We compare that with sort of term deposits or current bonds coming forward. They do sort of stack up reasonably favourably. If you're interested in looking at the income options, they call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz. Commodities still holding a reasonable bid. Oil is sort of still above that sort of $50, and as I say, it's going to be interesting now looking forward to see if that sort of can hold these sort of levels with potentially new oil coming on tap. So to sum it up, I say, if you're looking for income options here in New Zealand, say call us on 0800 867 323 to discuss the various options that are available out there. Certainly the dividend paying shares can offer a pretty attractive rate compared with sort of term deposits. So call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We look forward to speaking to you soon.